Algorithmic Strategy Update, 2 of 3. Algorithmic Strategy Update, Part 2 of 3. Updated through August 2026. Cosmic Algorithm Limited and Backseat Trader. Performance versus the Nasdaq-100 Equal Weighted Index. From October 2022 through July 2026, the strategy generated an approximate total return of 239%, compared with roughly 100% for the Nasdaq-100 Equal Weighted Index, or NDXE. That represents cumulative outperformance of about 139 percentage points. The compound annual growth rate is approximately 37.5%, with a Sharpe ratio near 1.10 and a return to drawdown ratio of around 17.6 times. The comparison matters because NDXE holds the same Nasdaq-100 constituents on an equal weight basis. It therefore provides a useful reference for assessing whether the model's ranking and rotation process is adding value beyond simply owning the broader Nasdaq-100 opportunity set. July pullback and August recovery. The strongest phase of the advance into mid-2026 was followed by a sharp portfolio pullback of approximately 16% through July. That setback was meaningful, but it also needs to be viewed against the preceding acceleration in returns and the strategy's higher volatility momentum profile. Through August, the portfolio has recovered by approximately 8.5%, recapturing part of the July decline. The recovery does not remove drawdown risk, but it illustrates why the process is assessed across full market cycles rather than by any single month. Nasdaq-100 market context. The strategy's recent path closely reflects an unusually powerful, and then abruptly reversing, technology cycle. Nasdaq reported that the Nasdaq-100 gained about 28% in the second quarter of 2026, its second-best quarter in 25 years. Semiconductors delivered an exceptional quarter as artificial intelligence infrastructure, memory demand and capital expenditure drove market leadership. May was particularly strong for technology, supported by artificial intelligence spending, semiconductors and digital infrastructure. By July, that momentum had reversed. The Nasdaq-100 fell 6.6%, while the Philadelphia Semiconductor Index dropped 20.6%, as investors shifted their attention from artificial intelligence demand toward monetization, valuation, and the prospective return on extraordinary capital spending. What the dashboard shows. The equity curve demonstrates that the strategy has compounded materially faster than NDXE, while the drawdown chart makes equally clear that the route has not been smooth. Maximum historical drawdown on the dashboard is about 13.6%, annualized volatility is about 33.4%, and positive months account for approximately 59% of the record. The best month remains a gain of 51.6%, and the worst month a loss of 11.3%. This combination is characteristic of a momentum strategy capable of capturing concentrated market leadership, but also exposed to fast reversals when that leadership unwinds. Why the algorithm can diverge from NDXE. NDXE equal weights the Nasdaq-100 constituents. The algorithm does not. It ranks stocks using multi-horizon momentum signals and rotates monthly toward the strongest relative strength candidates, typically holding around 20 positions. When leadership becomes concentrated in semiconductors, artificial intelligence infrastructure, memory, storage or cybersecurity, the portfolio can become materially tilted toward those themes. That can create substantial excess return versus NDXE, but it can also produce larger short-term swings when those same groups correct together. Outlook. The constructive case remains supported by artificial intelligence infrastructure investment, data center build-out, semiconductor demand and strong technology earnings. Nasdaq research has highlighted continuing large-scale artificial intelligence capital expenditure across major Nasdaq-100 companies. The counterweight is valuation. July demonstrated how quickly sentiment can change when investors question monetization, spending returns, interest rates or earnings expectations. The model does not attempt to forecast the turning point. It continues to rank, rotate and rebalance as relative strength changes. Key takeaway. The central result remains the gap between long-term compounding and short-term volatility. The strategy has substantially outperformed NDXE since October 2022, but July shows that excess return does not arrive in a straight line. August's approximately 8.5% recovery is encouraging, while the more important test remains whether the systematic process continues to adapt as Nasdaq-100 leadership evolves. Current example holdings. Current example holdings include Datadog, Cisco Systems, Fortinet, CrowdStrike and Palo Alto Networks. These are examples only and not recommendations. Positions may change as the model updates. Risk notice. Past performance is not indicative of future results. Investing involves risk, including the possible loss of capital.